Hey guys, welcome to the Stefan Livera podcast, episode 5. And my guest today is Neil Woodfine. Welcome, Neil, and thanks very much for taking the time.
Hi, Stefan. Thanks for having me on the show.
Yeah, great. All right, so guys, I will just quickly intro Neil. Now, I've been following Neil on Twitter for a while, and I think he has just really shared a lot of great insights in terms of Bitcoin economics and comparison of Bitcoin versus other tokens. And in terms of his background within Bitcoin, he is the organizer of the Beijing Bitcoin Meetup, and he has just recently left Wire, spelled WYRE, and they are a payments company based on Bitcoin. And so Neil is now working on his own Bitcoin projects. So yeah, thanks again for jumping on today. And I think what would be a great insight for the listeners would just be a discussion on the Bitcoin scene on the ground in China. So maybe you want to just open it up with a bit of discussion on that, Neil?
Yep, no problem. So unfortunately, these days I get a little bit negative when talking about Bitcoin in China. I think it's probably a bit strong to say it's dead in China right now, but it's certainly not doing particularly well. Like I run the Bitcoin Meetup in Beijing with Richard Bensberg, and I think right across the rest of the mainland China, you won't find another regular Bitcoin Meetup anywhere else, which is pretty amazing when you think of how involved China has been with Bitcoin in the past. Unfortunately, kind of what goes around mostly these days is a lot of altcoining and a lot of blockchaining, generally a lot of scams, a lot of pump and dump, and a lot of misinformation. I mean, China's always been kind of strong on certain elements in the Bitcoin space. So they've been very, very successful in mining. Like everybody knows, Bitmain, they basically own the manufacturing market there. Most of the biggest mining operations are based in China. And also you have a number of the very large pools are also based out of China. But that's about it. And these organizations aren't really contributing back to the community in any major way from what I've seen. And basically it's left the floor to all of the altcoiners and the blockchainers to kind of propagate their ideas, and it's led to a lot of kind of misleading information on the China Bitcoin sphere. So yeah, it's a bit of a problem, and there still are like a lot of kind of people interested in the topic. I just think there's not enough people that are willing to like kind of make the effort to start producing materials in Chinese and organize events like ours. To kind of provide to that demand. So, I mean, we get good turnouts between 50 and 100 people if we have some speakers. And people are, like I say, always very, very interested. But it pales in comparison to the number of blockchain events and altcoin events that are going on in Beijing and elsewhere in China. You'll see like 2 or 3 going on every week. And it's not just the domestic players, it's also kind of a lot of expat organizations that kind of get involved in all of this. So like, in my opinion, there's 2 kind of diagnoses to this problem. One is that the exchanges were closed in China and the regulatory situation is very uncertain. So China, for a while, had the biggest exchanges in the world with OKCoin and Huobi and a few other kind of lesser exchanges. But with the closure of them and the uncertainty around regulations, like Bitcoin certainly doesn't seem to be welcome within China. It means that entrepreneurs and businesses can't really make any long-term plans and can't kind of invest confidently with their resources and their time in building any kind of meaningful businesses. And so that really kind of incentivizes short-term players, get rich quick, basically launching projects that make a lot of money in a short space of time and then move on before kind of the regulatory hammer comes down. So that's one of the kind of factors contributing to the problem. The second is perhaps that a lot of people never really understood what they were getting involved in. I think that's probably a bit harsh, but certainly we saw a lot of Bitcoin businesses like OKCoin and Huobi paying a lot of lip service to trustlessness and decentralization and this new kind of financial future. But kind of with Bitcoin closed down and the kind of renminbi to Bitcoin liquidity not possible anymore, they've totally changed their tune and are now promoting all sorts of very strange economic models, a lot of kind of very questionable technology, and it suggests that they weren't really in it for the right reasons in the first place, and perhaps didn't understand. And like, if they did understand, I think they would be making more long-term plans for kind of what I think people like me and you see as the future, which is more kind of Bitcoin-centric.
Yeah, great answer. No, that's some great insights there. And what I take from that is, it sounds like there's not a very great prevalence of Austrian economics influence amongst the Chinese Bitcoin and, you know, what we might quote unquote call the blockchain scene. And it sounds as though there are quite a few Chinese sort of altcoiners and ICO pumpers. I presume, as organizer of a meetup, I presume you get a lot of offers basically of ICO pumpers who want to, you know, sponsor or have you as an advisor or to come and present to the meetup. Do you have any insights to share on that?
We certainly get a lot of messages on meetup.com and LinkedIn as well, actually, from various different organizations, both within and without China, looking to promote their projects to the kind of the members that we have. From the very beginning, I rejected all of those. We had Gnosis come and speak. I don't know how you say that, Gnosis come and speak once, because I thought the prediction market sounded quite interesting, and we were very explicit that they couldn't promote their token sale whatsoever. They only had to talk about the technology. But during his presentation, like, the audience asked some very, very kind of they asked some probing questions, and there wasn't very good responses. And then like a few months later, they launched their token sale and like kept 90% of the token supply to themselves or something. And that was basically the last straw for me. I was like, okay, we can't have these guys speaking anymore. And at that point, we just limited it to purely Bitcoin projects. But yeah, we get a lot of offers of sponsorship. A lot of people come along to the meetup and work for media organizations, which is a very kind of ambiguous term. And they're always looking for kind of ways that we can cooperate. I think that's why a lot of kind of original Bitcoin meetups around the world got corrupted, because for organizers of events like this, it can become quite like a nice little revenue stream. And I can see why people started taking those offers. But for us, we figured misleading the kind of the community, and there's a lot of kind of new people coming to these events. Misleading these guys is definitely not worth it.
The fiat money corrupts us all.
Right, well, exactly, yeah.
Yeah, no, that's a great point, and I think that's a great insight that you've shared there. I think the next thing that I wanted to discuss with you today, Neil, was one of your threads that really just went completely viral. It was from March 2018, and for the listeners, I will put a link in the show notes page. So what I'm going to do now is I'm actually just going to read through that thread, and then we can sort of break it down a little bit in detail. So I'm going to read Neil's thread here. So 1. A paraphrased response to someone asking what I think is wrong with the level of understanding of Bitcoin, blockchain, and crypto right now. In 2013, when I first got into Bitcoin, the vast majority of information online regarding blockchain was Bitcoin-centric. If you got into Bitcoin, you could not avoid learning about the economics, politics, and philosophy behind Bitcoin's creation, the problems it was built to solve. If you got into Bitcoin for the get-rich-quick, you stayed for the ideology. Since then, a growing number of people have realized the potential for distortions of the Bitcoin story to extract money from others. This started with pre-mined altcoins, but has expanded to permissioned blockchains, utility and equity token sales, and most recently, fork coins. All of these projects have very different, perhaps conflicting goals to Bitcoin, often representing part of the problem that Bitcoin was built to solve, namely, to remove the need for trust in online value transfer and to put constraints on monetary expansion. Now, all the people behind these projects want is for you to trust them as they freely print more and more money. What this has resulted in is an explosion of non-Bitcoin related information online. Misinformation has become a highly profitable business. Unlike in 2013, now a newcomer to the space really has to dig to find any quality knowledge. 99% of what they read or hear is going to be junk. There is no coherent ideology within these new blockchain or cryptocurrency movements. The noble goals are gone. Focus has shifted to efficiency gains for the trivial and the esoteric. Wacky economic theories are made up on the spot based on zero references. In 2018, if you get into cryptocurrency for the get-rich-quick, you stay for the when to buy, when to sell. The scams are winning, for now. They're winning the information war that they started through sheer saturation. But ultimately, they cannot escape economic reality. If their models are fundamentally broken, they will fail, taking their investors down with them. To save money and time, it's critical that anyone getting into the space for the first time learns first about Bitcoin, not just the tech, but the economics and politics too. For some reason, ideology has become a dirty word. In the name of open-mindedness, we're supposed to relinquish any form of structured reasoning. A priori and theory are also scoffed at. Instead, real-world observations are primary, understanding secondary. X is worth Y, it must be valuable. I think Bitcoin's continued resilience versus its stream of pale imitators will demonstrate why both ideology and a priori are powerful and essential to taking productive action. So that was the thread by Neil. I think that was a very powerful thread, Neil. Maybe let's dive into some examples of, contrasting Bitcoin education today versus back in 2013. So maybe if you could sketch the scene a little bit in terms of what was the scene looking like in terms of sites, resources, forums versus now.
Right. So I think back in 2013, when I got into it, there wasn't a whole lot of resources, and I think a lot of the Bitcoin space revolved around the Bitcoin subreddit. That's definitely changed today for the Bitcoin space and kind of blockchain more generally. But certainly there was a lot of people focusing on this Bitcoin subreddit. Nakamoto Institute was just getting kicked off then, I believe, and I enjoyed that a lot. I learned a lot from that. And I think it was very formative in kind of setting my opinions early on. And then, there was a few kind of small blogs, but there was no kind of major resources. Perhaps some of the Bitcoin news websites like CoinDesk and stuff like that. But all of these resources were focused on Bitcoin topics. Like Bitcoin was still super new then. It was only, 4 or 5 years old. People were still working out very basic fundamental questions like, should Bitcoin have value? Why does it have value? Will it continue to have value? Does the technology work? Will it continue to work in the future under certain stresses and attacks? And these were kind of like the questions that everybody was asking. So we had to talk about Bitcoin. But I think Bitcoin has kind of proven itself in a lot of those domains already, and we've kind of come to a bunch of conclusions on it, which means that people are starting to talk about lots of other things. And unfortunately, that's led to a lot of people discussing very strange and like I say, wacky kind of economic theories regarding decentralization and tokens and that kind of thing. For me, I originally got into Bitcoin absolutely for the pump, for the get rich quick. I didn't really have any kind of clear ideology back in 2013. I was always a little bit suspicious of authority, but that was about it. And I bought some Bitcoin with some savings and enjoyed the ride up. But it was during the ride up that I learned about Austrian economics and libertarianism, which was a really like kind of fascinating kind of new space for me, and that kind of got me hooked. And so when we started taking the ride down again, it really wasn't so much about the get rich quick anymore. It was I realized there was much more to this technology, way more to this movement. And I think for people getting into it now, that is like 100% not the case. Like what we have is an asymmetry of incentives, and I hate to invoke Naval here, but there's incentives to creating misinformation within the blockchain space, because with altcoins, you can make a lot of money very fast. So if you can convince people to buy into these things that you've either pre-mined or given yourself a token allocation, you can dump it on the market very, very quickly and make yourself a lot of money. But for the people that are talking about reality, people that are talking about theories that have been proven and Bitcoin related materials, there's very little kind of financial incentive for them to do that. And we just have this, and what that's resulted in is just this explosion of nonsense information. And you have people that have only come into the space for a few months, and they're talking about like brand new economic theories. They've never even read a real book on economics. Like it's really scary. Yeah, I mean, I think it's a really a bad situation that we're in, but at the same time, it's temporary. Like if our theories are correct, all of these projects will ultimately fail. Like if they're not sustainable. And as they kind of collapse, they're going to teach a lot of people a lot of lessons, and hopefully that they will still have enough kind of interest to pursue and look into Bitcoin related materials.
Yeah, that's a great point. I think as people get burnt from some of the more scammy type projects, they may some of them may come back to realize where the real value was to begin with, and was there all along.
Yeah.
One interesting.
Another thing is that like it might sound like I'm saying that a lot of this misinformation and this scamming is intentional. It doesn't have to be intentional. I think a lot of these people are absolutely convinced that they're correct, and they have no reason to doubt it because they're making a lot of money from it. Like there's no downsides for them when these projects fail, so they can kind of just continue going. It feels like something's going right. In some ways, they don't really have any skin in the game in the way that they structure these projects. So I think that like it's not necessarily people that are like maliciously trying to scam people, but essentially what they're running is still scams. And if they're not thinking about the projects, if they're not thinking about the incentives and the structures within these projects enough themselves, then like kind of that's also their fault.
Yep. No, great point as well. I think we have a mixture of scammers in this space. We've got the intentional ones and the unintentional ones who actually think they're doing the right thing, right? And I think you make a good point in your thread when you say efficiency gains for the trivial and esoteric. So, an example of that might be people who run around talking about their little project that they think is going to take over the world, but they don't understand that it pales in significance against Bitcoin's, kind of mission to try and rework global money. Do you have any examples of, some of these kind of trivial and esoteric projects or kind of the aims that they're going for compared to Bitcoin?
I mean, one example that I use quite often is this decentralized storage kind of meme that a lot of the cryptocurrencies are running on the back of. This idea that we need to decentralize storage and we need a token to pay for it. Like, I don't really find storage to be a problem in my life. I don't think any businesses that I know of or have worked with have problems with storage, and there's not like a gigantic benefit there. I mean, that's just one example. but I mean, there's hundreds of others, right? You're putting me on the spot here.
Yeah, sure. No, that's totally fair.
But like with Bitcoin, the goals are very, very clear. Like what we want to do is create an online value transfer system, something that's native to the internet, that doesn't require any third parties, can't be censored, and is objectively scarce. And that's like, you can sum it up in a sentence. And like the impact is like when you understand monetary economics and the fact that like money is one half of every single transaction in an economy, like you realize like this has very big implications. But when you talk to kind of people that are buying into the blockchain space and the cryptocurrency space, it's very difficult for them to describe the mission of this movement. Like there's, like I said in the tweet, there's no coherent ideology whatsoever. Like it's lost all of the kind of libertarianism and anarcho-capitalism. Austrian economics is all gone. Just these very big and ambiguous goals like decentralization and another thing I find, it's like kind of almost a little bit anti-capitalist and kind of anti-progress, in that they describe corporations as like kind of a negative for society because they have profit incentives and the services cost more because the companies are taking a cut. But like that's how business works, and those incentives are the incentives for the businesses to provide better services, and actually through competition those margins are always kept fairly minimal. Whereas like we know that decentralized systems, I mean Bitcoin's a great example, they're not very efficient. Like they're very expensive to run. They're typically very slow, and like people aren't necessarily going to get a good service for them when it's applied outside of the monetary sphere. And then you've got the problem that like they're all inflationary. So we've got multiple different projects all launching their own tokens, like ad infinite, just forever, and like it's a very, very inflationary. So like like when I say it's counter to what Bitcoin stands for, we've got like something that's very anti-capitalist and very, very inflationary. It feels to me like, and I mean, all these projects rely on a lot of trust because they have very, very centralized development teams, aren't particularly secure from a proof of work perspective. They just seem to be completely at odds with the goals of Bitcoin, and I don't actually believe in decentralization or kind of disintermediation.
Yep, great points. Agreed. All right, so I suppose then let's contrast that and let's talk about what resources are there out there that you believe are actually good ones for new people to learn about Bitcoin.
Yeah, this is something that I've got an article. I've got like about 10 Medium articles that just never get finished. But one is like good resources for people. I mean, obviously, I'm a huge fan of the Satoshi Nakamoto Institute. I think that is a brilliant resource, particularly the crash course in Bitcoin's political economy. I think that everybody getting into Bitcoin, cryptocurrency, or blockchain for the first time, like absolutely has to read that. There's also Jameson Lopp's very good summary, although I find that can be sometimes overwhelming for somebody new, and they can kind of get lost or very, very bored. So I'm kind of cautious about sending that out to people. But these days, my best resource is Twitter, and like nothing beats a well curated Twitter feed. And I would recommend that everybody makes the effort to kind of curate their own Twitter feed. But one of these days, I'll put out my article with a bunch of recommendations for people who to follow.
Yeah, no, agreed. I think the Nakamoto Institute crash course is one of the best ways to come into this space and really learn what are the key things to understand. And I think, it's a great point that you make about Twitter trying to curate your own feed in such a way that you get, high signal, low noise. And I think the challenge that a newbie in 2018 or late 2017 is they don't know who to even listen to, and that's really what your thread was really about, is that there's just so much noise out there. It's very hard to filter down to what is the signal, who are the people to listen to, right? Because it's such a multidisciplinary thing that you can't really, no one person can really be an expert in all of the areas. So yeah, it's definitely a difficult spot there for a newbie. So so let's move on to the next thread that I wanted to discuss, which was a thread that you had, and basically the point about it was you were saying Bitcoin is not about functionality, usability, or convenience. It's currently quite bad at all of those things, but it's about sound money. Did you want to sort of expand a little bit on that theme?
Yeah, so often these tweet storms are triggered by people that I'm talking to in real life, and they'll start like throwing some questions or some arguments my way, and I kind of summarize them in a tweet storm. But in this one, I think somebody was criticizing Bitcoin for not being particularly convenient and difficult to use, and like it's never going to succeed as a result. What I was trying to get across to them was that like Bitcoin is already very, very successful, and it's not succeeding because it's useful, and it won't succeed because it's useful. Because I mean, we already have some very, very useful payment technology, like in China, and Alipay rocks in terms of usability. Like they've really nailed it. But unfortunately, Alipay is getting worse recently because it's reliant on this fiat kind of renminbi backbone, and increasingly kind of KYC and AML is rearing its ugly head, and it's becoming more and more difficult to use. So one example is you can only make transactions up to a certain amount in a year. I think it's like something like 200,000 renminbi or something like that. Once you go over that, that's it. You can't make any more transfers to anyone. What you have to do if you ever receive money into one of these wallets, whether it's Alipay or WeChat, you have to first withdraw it to your bank account. But then you can still send it out again via the app, but it has to come from your bank account. You get all these kind of like crazy kind of friction entering the system. And this is because it's built on a base layer, which is not trustless, which relies on third parties, and is starting to get kind of all sorts of interventions. And that's where Bitcoin offers its value proposition. Like its value comes from the fact that it's trustless, that it can't be censored, and that it's scarce, and that's what's going to lead to its success. That's not to say that like usability is not something that we shouldn't be working towards. Like there's all sorts of businesses and kind of developers working on really interesting solutions to this. It's not something that I'm particularly concerned with, and I think we always have to bear in mind that like Bitcoin has some very kind of key, unique value propositions that don't exist elsewhere, and we have to focus on those and kind of protect those and develop upon them before we start talking about usability or expanding usability.
Yep, great points. Yeah, and I think the point I take away from that thread is really just that we have to keep layer one trustless, that really all of these other fancy pants, usability, convenience, functionality, a lot of those points are just going to have to come in on upper, layer 2, layer 3, higher layers. That's how I would think of that.
Yeah, I mean, maybe we can. Somebody will come up with a great solution for making layer one more efficient, more usable. I don't think that should be resisted. It just, according to current analysis and theoretically, it just doesn't add up. It doesn't seem like layer one is going to scale much more than it already has. Therefore, we should focus on layer two. Another point on this as well is I work in the payments industry, and one thing that I often say is that payments is a regulatory game and not a technical one. The reason why PayPal and TransferWise and all of these payment companies succeed is because they're very, very good at navigating the regulatory landscape, adapting to regulatory changes. That's where the success comes from. Lowering the cost of transactions is using economies of scale to deal with the regulatory obstacles that are put in the way. It's not a technology. So when you have these fintech companies and they're talking about technology, payments is not really about technology. It's all about managing that regulatory risk. But with Bitcoin, it totally flips, and now all of the payment issues and efficiency and stuff, all of it becomes a technical issue now. Now we're not talking about like regulations and KYC and ML, jurisdictions and different fiat and FX markets and all of that. Now we're just talking about the technology, and like it's going to be really, really huge kind of benefit to payments and financial transactions. I think we're going to see a lot of really interesting developments in that space.
Yeah, excellent articulation there, Neil. I think, you make a great point there that really a lot of these payment companies are just, their skill is in dealing with regulation. It's not in coming up with, architecting clever technical solutions. So, great point. I think the next one to get into is around, you had another thread which is around what we might call the bad incentives of people who make unnecessary tokens and ICOs. And so in this thread, you basically talk about how a lot of these ICOs and altcoins, and they're often cynical money grabs, and they're just using kind of unnecessarily fancy words, and they're basically interposing unnecessary tokens. So did you want to expand a little bit on that?
Yeah, if anybody follows me on Twitter, they'll have heard a lot about this because I talk about it a lot, probably way too much. But I think like right now, like a lot of people are coming to a conclusion on Silicon Valley that perhaps it's not all we made out to be. Certainly when I entered the startup space, there was a lot of kind of big VCs and a lot of kind of startup thought leaders that I looked up to. But as we enter this kind of like Bitcoin, blockchain, crypto mania, I'm starting to realize that a lot of these people that I respected perhaps aren't as kind of screwed on as I thought they were. And I think what we've seen with the kind of altcoin token mania is kind of like this ultimate culmination of like Silicon Valley ideology, which is like build fast and break things, like just experiment for experiment's sake, pump and dump, like with like IPOs and acquisitions. And like we've got to the point where they've dropped all pretense of like building something useful with like actual revenue streams, no cash flow, and we're just into pure equity. So we're into like this project that sells itself on just story, marketing, and like the thing that's like the product that's sold is just equity. Like we've kind of it's kind of all this kind of insanity that's going on. And then we look at the incentives within the systems that they're proponents for, and they just don't add up. So in any of these, I think like we brought up the example previously of shared storage. Typically within these networks, you're going to have two types of user. You're going to have the actual users, the people that are gaining value from the system, and the service providers. So in the case of sharing, in the case of the shared storage, you've got somebody sharing the hard drive to the network in exchange for tokens. And if you look at it closely, there's no incentive for either of these entities to hold the token. So the user doesn't want to hold the token. He just wants to buy storage space. And then the service provider receives these tokens in exchange for providing some hard drive space. Like he doesn't want to use the service himself. He's a service provider. He doesn't want to go on to spend these tokens on somebody storing his information. So he definitely doesn't want to store the tokens either. And so he has to liquidate. And then you look at the founders of the project, the CEO and the developers that are working on it. All of these guys also don't want to hold on to the tokens in the long term. The whole point of the token model is that they create what they call incentives for them to develop open source software, and their incentive is to dump. Their incentive is to sell these tokens at some point in the future. So one question I often like to ask these when I'm kind of trolling in real life is like, what's your target price? Like when are you going to dump? Because I think that's incredibly important information for anybody that's investing in the project. Because once these people have dump their tokens, these incentives that they're all talking about suddenly don't exist anymore. So there's no more kind of interest in kind of continuing to develop on the project. And then you've got all of the kind of satellites to these projects, which are described as advisors and then promoters. And you'll have, like, I'm sure, a bunch of meetup organizers also taking tokens in exchange for allowing these people to promote to their networks. All of these guys also don't want to hold the tokens. They're not interested in buying hard drive space. They just want to sell. And like, when you break it down like this, you realize that no one wants to hold the tokens at all. Zero people want to hold them. And how can you sell this as an investment? How can you describe it as an incentive if everybody within the network is incentivized to sell? It just doesn't add up.
Yeah. And even more
and
than
like,
that,
and I think a lot of people just use the analogy of like a fairground, and people pay tickets to get in the fairground and get access to the service. And so, like, I'm going to go to storage or whatever, and like, I'm going to buy their tokens so I can use their service. But the thing is, with the fairground, they fix the prices. Like, there is no free market. There is no exchange rate. Like, the exchange rate is set by the fairground, and they force you, if you're going to enter their territory, to pay for a ticket at a set price. And you can't achieve that when you're selling these things and allowing people to speculate on an exchange. Like, it doesn't make sense. And it drives me crazy that these people don't have any kind of ideological or kind of literature backing to their economic theories. Like, you have some very, very intelligent people that have, like, been successful in the past, and they have no kind of basis for the theories that they're proposing. And I find that very, very offensive, that they think that that's okay.
Yeah, right. Yeah, and I think the other point, just to add to that, is it's not only is there nobody who wants to hold it, it's that the timing is all completely wrong, because these ICOs, they get paid up front. And so then now they have no more incentive to actually go and build a working, viable product. They just get all the money up front, and they can just skip and run, or they could, put in the most very poor effort and some tokenistic effort, if you will, and then just say, oh, well, it couldn't work, we failed, oh well, guess, we're just going to scoot off with the money.
Exactly, and that's the theory. So we look at, like, we just kind of think about it a priori. We look at it and we're like, okay, that is going to be the result of this system. And then you look at what's actually happened. That's what's actually happening. Like, you get these people that are launching multiple projects one after the other. There is no incentive for them to stay on once they've raised that money. And a lot of them perhaps will stay on, but they get to live out this, like, strange kind of, like, Silicon Valley CEO fantasy, where they just, like, hire a bunch of people and get them to do things while they kind of, like, relax and kind of command people to develop very, very questionable products. It's nuts.
Yep. Agreed. Okay. The next one I wanted to ask you about is just a discussion on Nassim Taleb's concept of the intolerant minority. So some people have commented in the past that they believe, okay, it's Bitcoin's intolerant minority that's going to make it win. But I think you had a slightly different point of view. Did you want to expand on that?
Yeah, so I think even within the kind of Bitcoin maximalist space, I'm probably a little bit contrarian on this one, because I don't think this makes sense at all. I think it's analog to the Bitcoin is a cult religion, Bitcoin is tribal. I think it's the same as that argument. This kind of idea that Bitcoin is kind of like a confidence game, or perhaps a marketing game, and we have to convince people to use it. I think in Taleb's theory of, like, the dictatorship of the minority, what he's describing is not people kind of buying into these to the ideology of the minority. It's them being flexible, adapting to it. Whereas I think in Bitcoin, what we want to see and what we expect to see is completely the opposite. If Bitcoin is a superior monetary asset, if it's better than fiat in both scarcity and ability to use it freely, then people will use it because it provides them benefits, and they will eventually buy into the system for its benefits, instead of them kind of being like, oh, okay, the Bitcoiners are being stubborn again. Okay, we'll use Bitcoin. Actually, I think in a monetary system, being a stubborn minority is really bad. Like, if you look at the Bcash guys, they're not going to do very well if they're going against the majority. Like, money relies on the fact that you're part of the majority and that you can exchange it for more things. So, I don't particularly like this intolerant meme. I think it kind of describes Bitcoiners as bullheaded when actually they're very, very open-minded and are just kind of making decisions based on the reality as they see it.
I think that's a great point you make, and actually the Bcash analogy is quite a good one. I haven't heard that before, and I think if I had to summarize that thought, it's sort of like saying it's not that Bitcoin is going to win because the Bitcoiners are so intolerant. Bitcoin is going to win because of its monetary superiority.
Correct. Yeah, exactly. For example, the internet was not successful because we had a minority of people insisting that you send them an email instead of sending them a letter. Like, people chose to send emails because they were more convenient, they were faster, they were cheaper, all of that stuff. With Bitcoin, people are going to choose Bitcoin because it's scarce and therefore can hold its value much better than a fiat currency, and because they can send it without having to ask a third party for permission. And those are the qualities that are going to attract people to it, and they're not going to be adopting it because they're being flexible to a small minority. They're going to adopt it because they actually personally want to use it and see the benefits.
Yep. And perhaps now the flip side of this argument, the other way people come at it, is they say, oh, you Bitcoiners, you're so toxic. Does Bitcoin need to be more quote-unquote civil to win, or can it win regardless?
Who more civil to who? Like, the people that this comes from are generally one of a bunch of categories. They're either altcoiners, who are basically promoting these very nonsensical economic systems and not really contributing much. You got the private blockchainers, who are just glorified consultants in most cases, who generally don't know anything about technology. And then you've got proponents of the fiat system and no coiners. And yeah, Bitcoiners are uncivil to them, but all of these, I mean, particularly the no coiners are kind of enemies of Bitcoin, and they're causing a lot of harm by promoting the ideas that they're promoting, and they deserve to be criticized and held to the flame for it, in my opinion. From my experience, Bitcoiners are extremely civil. I recommend anybody that thinks Bitcoin is not civil to head to a Bitcoin-focused event, whether it's a Bitcoin meetup or something like Building on Bitcoin or Baltic Honey Badger. These events are incredibly civil. Everybody's super nice and welcoming, and doesn't get on anybody's back, even in debates. I think, people are just a little bit upset because their ideas are being criticized, and they don't like it. I mean, actually, another point on that, I bumped into a bunch of ICO guys recently at some of the events that I've been attending, and in real life, I find them to be completely obnoxious. Because, I mean, I'll give them the cold shoulder if they start chatting about their ICO projects, but they will insist on describing why their project makes sense, and they won't leave you alone. I'm pretty sure if you chat to a Bitcoiner and they weren't interested, you weren't interested in talking to them, they would be cool with that and just kind of move on. But these ICO guys are on a mission to frame themselves as not scammers.
Yeah, you got the missionaries. All right. The next one I wanted to chat about, and I've seen you comment on this, is just the absurdity of regressing back to barter. Like, let's say you had bread coin and steak coin and milk coin.
Right. Yeah. Like essentially that's what this kind of multi-coin model is proposing. There's an infinite number of services that we can provide in the world. Therefore, like, do we have an infinite number of tokens? I think multi-coiners would suggest any online service would require its own token. But like, if you compare that to the real world, like every service and good that we buy doesn't require its own token. And if we did all use a separate token for each different service, it would be incredibly inefficient. Like, anybody that's read about the emergence of money knows that the reason that money exists and that we gravitate towards one commodity for monetary use is because it's like multi-coin model is completely inefficient, and it's just a gigantic backward step towards barter, where we have tokens that represent all the things that we can think of. Again, like total madness. And I think sometimes when you ask these people how it would work, I can really drill down with them. I've tried it a few times. They'll generally start describing things like baskets of tokens and like indexes and using atomic swaps and decentralized exchanges to flick in and out of these different tokens. But I don't think they understand like how liquidity works on an exchange. Like, I've worked at an exchange, and building up liquidity is really, really difficult. And the idea that you could have like 10,000 coins, all with a pair with another 10,000 other coins, is total madness. You wouldn't be able to build up any kind of serious liquidity between all those tokens. You'd have to go through one token which had more liquidity with all the other tokens, i.e. Bitcoin. And again, for any of these tokens, the more exchangeable they are, the better these atomic swaps get, the more efficient they are, the less reason you have to hold any of the tokens at any one point. You hold your Bitcoin, and then when you want to use one of these very questionable services, you immediately convert your Bitcoin into the token, spend it, get whatever service that you wanted, and then the recipient on the other side immediately liquidates via its atomic swap into Bitcoin, and then the token like cannot achieve any kind of meaningful value whatsoever.
Great.
So I mean, like, these guys have a very, very hard time describing in any kind of clear way how this model would work.
Yeah, and I think you make a fantastic point there about how the better atomic swaps get between the different cryptocurrencies, whether they're centralized or decentralized atomic swaps, the better that is for Bitcoin, because now there's even less reason to hold these altcoins. There's more reason that people would want to just go to the best one and not waste time holding a subpar coin or a coin with less liquidity. You'd want to get out of that as soon as you can.
So the only reason that you would ever hold one of these tokens is because these projects have created artificial friction that requires you to use one to access their servers. But I mean, like, if you think about like your toolbox at home, you hold your toolbox, you buy a toolbox and you hold your toolbox at home because you need it like immediately when you need it, right? And it's inconvenient to go to a store, buy a new toolbox, and then fix whatever you're repairing. But if you could make the toolbox appear in an instant and disappear in an instant, you wouldn't ever need to buy that toolbox and hold it at all. You would just kind of swap in and out. And in exactly the same way with these tokens, people are just going to, well, I'm saying they're going to, actually nobody's going to do this because none of this makes sense. But let's say there was a project that required this, and nobody's going to hold the token. They're just going to buy and sell it.
Exactly. Fantastic analogy. I like the toolbox one. That's really good. Okay. Now, the next one is it's a common little canard or little confusion that you see in the community, and sometimes even people who are kind of pro Bitcoin make this error. They I guess I'll ask it this way. Is Bitcoin backed by energy, math, scarcity, or decentralization?
Okay, so yeah, people are using this "backed by" term totally willy-nilly. It's starting to lose all meaning. So historically, in a monetary context, "backed by" means there is a commodity sitting somewhere in a vault that whatever you're using as the currency represents. And that's what "backed by" means in a monetary sense. But now, like I mean, perhaps it was the US dollar that started it. I don't know, but like it's backed by the faith of the US government or whatever it says on the dollar bills. It's backed. A lot of people say it's backed by the taxpayer. It's backed by the military, things like that. And then now we've seen that kind of expanded into the cryptocurrency space. Where people start saying like it's backed by decentralization, it's backed by all these weird and wonderful things. But I think if we're going to really succeed with this kind of monetary revolution, then we have to start using terms properly. Like one of the reasons that we're in this mess in the first place is because people have forgotten what money is and how to use these terms. When we talk about backed by, I think Bitcoin is just backed by Bitcoin. It's not backed by anything else. It's the energy used to create it is the same as the energy used to mine gold, for example. And we don't say gold is backed by energy. It's nonsensical. All Bitcoin is a scarce commodity. Yes, it requires energy to obtain it, and yes. It relies on decentralization to maintain its scarcity and maintain its censorship resistance, but it's not backed by any of these things. And we may, in the future, I expect that we will start to see Bitcoin derivatives, and then we can start saying that like this token that we're sending around is backed by Bitcoin. You can possibly say it about Liquid, Blockstream's Liquid. I don't know, like the tokens on there are backed by Bitcoin. But yeah, I think we need to start using that term more correctly.
Yeah, agreed. Fantastic point. I like the way you articulated that there as well. Okay, so I think the last one is just a bit of a throwaway one. Thought it was kind of funny. I saw a good tweet by you. You said it's related to Nassim Taleb's concept, skin in the game. So you said, so the tweet here is: never met an ETH investor who is saving their coins to use on a smart contract themselves. All BTC hodlers I know are saving their coins to purchase things and make investments in the future.
Yeah, so this plays back into the incentives to kind of hold and dump that we talked about earlier. But like when I'm talking to heads, as they're called, about Ethereum, like I like to, it wasn't me that said it. Somebody else on Twitter mentioned it. I can't remember who it was, but one of the questions they like to ask them is, what's your favorite smart contract? And that often is a difficult question to answer for them. But yeah, like in the same way, it's like, okay, what are you saving your tokens to spend on? Like, what smart contract are you looking to spend those ethers on? And generally, there's not a good answer, and they tend to try to worm their way out of it. Whereas like every single Bitcoin long-term holder that I know are all looking forward to, I mean, there is certainly an element of get rich quick to it, but are looking forward to buying things with it, having fun, but then also kind of investing, creating businesses, and basically using the tokens that they're holding as money. Whereas the Ethereum people are far less sure about what they're going to use them for. I think they secretly and really don't want to say it, but are all looking forward to somebody else wanting to use these smart contracts so they can sell their Ethereum to them. But I don't think that person's going to come.
Yeah, great point. I think it's sort of like a smart contract greater fool theory sort of thing going on there. Yeah. Okay, yeah. So I think we're getting pretty much to the end of the time. So did you have any final comments that you wanted to make, Neil?
No, I'm good. That was a fantastic chat. you've had some amazing guests on prior to me, so it's an honor to be on the show.
Oh, mate, it was a pleasure to have you on as well. All right. Well,
I would like. Yep. Oh, sorry. Yeah, I was just going to say anybody who's on Twitter definitely needs to follow me if they're not following me already.
Yes, guys. So you can find Neil on Twitter. His handle is Woodfine. I will put the link to Neil's Twitter account on the show notes page for this episode, as well as some links to some of the tweet threads and comments that Neil has made that we discussed today. So guys, look on my website, stefanlivera.com, search SLP5, and that will be the show notes page for this episode. Just finally, if you enjoy the show, please give it a 5-star rating and share it with your friends. And with that said, we'll say goodbye to you guys and see you in the next one. Thanks. Bye.